Welcome to the deep dive. Before we jump into today's story, we have to do our necessary piece of housekeeping.
Yep, the disclaimer.
All the data, the projections, everything we're about to discuss today is based entirely on the source documents you've uploaded.
Which means this is for educational context only. We can't and don't guarantee that everything is 100% correct.
And crucially, this is not investment advice. It never is.
Please, always do your own research before making any kind of financial decision.
Okay, with that out of the way, let's get into it. Today, we are diving deep into PROCEPT BioRobotics, ticker PRCT.
Right. A surgical robotics company that's really trying to shake things up in a very, very common area of men's health.
We're talking about benign prostatic hyperplasia, or BPH.
And our sources today, we're looking at financials, some analyst reports, clinical trial data. They all paint a picture of a MedTech company at a real inflection point.
An inflection point how?
Well, it seems like they've gotten past those early technical hurdles. Now they're facing the big challenge, mass commercial adoption.
And the problem they're trying to solve is just enormous. The patient dissatisfaction historically has been huge.
Oh, absolutely. For decades, treating BPH meant this terrible trade-off.
Right. You could get the gold standard surgery, the TURP procedure. It was effective, but it often came with really high risks to sexual function.
Or you could go for something less invasive, but then you'd risk it not lasting, especially if you had a larger prostate. It just wouldn't hold up.
So that's the pain point. That's the compromise PROCEPT wants to eliminate.
Exactly. So our mission for this deep dive is to really unpack how their technology, which is called Aquablation, tries to give patients the best of both worlds.
And we'll look at how their business is structured, what the major risks are, and what catalysts could really define their story from here.
Let's do it.
So let's start with the product. What exactly are they selling?
They develop and sell two main systems. There's the original AquaBeam, and then the newer AI-powered Heidi Ressel robotic system.
And it's all laser focused on one thing.
One thing, aquablation therapy for BPH. A condition that affects, something like 40 million men in the U.S. alone? It's a massive market.
So the differentiator isn't just, hey, we have a robot.
No, not at all. It's how the robot works. This is the only AI-powered, FDA-approved, heat-free automated robotic therapy for BPH out there.
That combination sounds like their main technological moat.
It is. And that heat-free part you just mentioned, that's the key.
It sounds so simple, but it's really the entire ballgame, right? The traditional methods, TURP or lasers, they all use heat to destroy the tissue.
And that heat creates collateral damage. It fries the delicate nerves and structures right around the prostate.
Which is exactly why those old procedures have such a terrible side effect profile when it comes to sexual function.
That's right. And Aquablation's approach is, it's really clever. It uses real-time imaging, fusing ultrasound and a cystoscope to build an AI-planned map of the prostate.
So it knows exactly where to cut and where not to.
Precisely. Then a high-velocity saline water jet removes the targeted tissue using something called cavitation. It's not heat, it's pressure. The damage is completely localized.
And that precision, that connects directly back to the patient benefit.
Absolutely. The clinical data is stark. It really validates the whole approach. Aquablation retains ejaculation rates in about 90% of cases.
90%. And what was it for TURP?
Less than 20%.
Wow.
For patients, especially younger men, that is a game changer. It's a huge driver for adoption.
Okay, so the technology is a clear winner for the patient. But a good outcome doesn't always make a good business. How do they monetize this?
Right. How do they turn this into a scalable financial model?
We always look for that razor and the blade structure in MedTech. Does PROCEPT have that?
It definitely does, and it's a robust one. The razor is the big capital equipment. The robot...
The AquaBeam or Heidi Ressel system.
Exactly. A hospital buys or leases one for an average price of around $460,000. That covers their big upfront R&D spend. But the real long-term value? That's the blade.
The disposable part you need for every single procedure.
Precisely. For every single surgery, they have to use a proprietary single-use disposable handpiece for that water jet.
And that's not cheap, I assume.
It runs about $3,200 on average. So every time that $500,000 machine gets turned on, it's ringing the cash register for a high-margin $3,200 for PROCEPT.
That gives them incredible visibility on future revenue as long as the machines are being used.
And they are being used. The utilization numbers are proving the model works. Our sources show handpiece and consumable revenue in the U.S. The core blade revenue grew by a staggering 50% year over year in Q3 of 2025.
50%.
Yeah, hit $44.4 million just in that quarter. So these systems are not collecting dust. They are being used. And that validates the entire recurring revenue thesis.
Okay, let's shift to the structural advantages. Technology in this space moves so fast. What's stopping a competitor from just building a better, cheaper robot next year? What's the real moat here?
It's multi-layered. It's built on a foundation of clinical evidence and patent law.
Okay, walk me through that.
The first, and I would argue the most powerful layer, is what the analysts are calling the clinical data wall.
From their big pivotal study, the water study.
Right. And they have the 5-year data from it now. That's long-term data.
So what did that study actually prove?
It proved two critical things. First, non-inferior efficacy to the gold standard, TRP. So it worked just as well at relieving the symptoms. But, and this is the key, it has a radically superior safety profile.
And there was a long-term benefit too, right?
Yeah, a huge one. The study showed a 51% lower retreatment rate compared to TRP over 5 years.
So let me get this straight. It's safer, it works just as well, and patients are half as likely to need another surgery down the road.
That's it. And that creates a massive barrier to entry. You can't replicate 5 years of randomized clinical trial data overnight.
It would take a competitor a decade and billions of dollars to even try to catch up.
Exactly. Now, the second layer of the moat is straightforward intellectual property. The patents on their combination of ultrasound fusion, AI planning, and the water jet system are protected until about 2037.
So that specific combination is locked up.
It is. It locks up their unique method for the next decade plus.
Okay, so beyond the tech, there was a big move in the C-suite that our sources flagged as a huge strategic signal. The new CEO, Larry Wood, who came on in September 2025.
Yes. Wood is seen as a genuine game changer in the medtech world.
Why is that? What's his track record?
He was the architect behind the massively successful scaling of the TVR business at Edwards Lifesciences.
TAVR, that's transcatheter aortic valve replacement. That was a huge deal in cardiology, right? It took a procedure from open heart surgery to minimally invasive.
It completely transformed the field.
Okay, but that's a huge parallel to draw. We hear about every new robot wanting to be the next intuitive surgical. Isn't comparing a BPH device to a platform like TAVR maybe overstating the potential here?
It's a fair question, but a guy like Wood wouldn't come out of retirement for just a niche product. TAVR wasn't just a device. It was the playbook he ran.
What was the playbook?
Focused clinical data, rigorous physician training, and this is critical global reimbursement coordination. His arrival signals a ton of confidence that Aquablation can follow a similar platform trajectory.
Especially since the opportunity might go beyond just BPH, which I know we'll get to later.
Exactly.
And speaking of that reimbursement piece, 2026 is a massive year for them. They're getting a Category I CPT code. Why is that specific change so important for a hospital?
This is enormous for their commercial rollout. It's a huge catalyst. Before this, they were often using temporary Category 3 codes.
Which means a lot of paperwork.
A ton of paperwork. Hospital admins had to fight for case-by-case pre-approvals, argue with insurance companies. It's just friction.
So it makes CFOs reluctant to greenlight the procedure, even if the doctors want it.
Precisely. Category of status just wipes that all away. It automates the reimbursement. It makes it easy to bill for. But there's another layer here that incentivizes the surgeons themselves.
Okay, tell me about the money for the physician.
It's tied to what are called relative value units, or RVUs. The proposed Medicare payment for Aquablation is set at 16.12 RVUs. The old TRRP procedure sits at 15.82 RVUs.
That seems like a tiny difference, 16.14 versus 15.82. Why does that matter so much to a urologist?
Because it's a signal, and it multiplies. You have a procedure that patients want because it's safer, that the hospital wants because it's easier to bill for, and now the doctor gets paid slightly more to do it.
It creates this perfect economic alignment.
A powerful incentive loop. The expectation is that this is going to trigger a significant surge in demand and system purchases all through 2026.
All right, let's look at the raw numbers. The story is fantastic, but do the financials back it up?
The top line growth is undeniably strong. For Q3 2025, total revenue grew 42.6% year over year, hit $83.3 million. That is serious acceleration.
And the full year picture?
Management's guiding for a full year 2025 revenue of $325.5 million. That's a 45% growth rate year over year.
And they've given a look into 2026 as well.
They have. The outlook for 2026 is between $410 and $430 million. Even on the low end, that's still a sustained growth of 26% to 32%. It's very strong.
And that growth has to be built on getting more machines into hospitals. What does the installed base look like?
As of the first quarter of 2025, they had 703 systems out there globally. And importantly, 547 of those are in the crucial U.S. market. That installed base is the foundation for that recurring blade revenue we talked about.
Okay, now for the other side of the coin, profitability. All this growth costs a lot of money, especially in sales and marketing. Are they making money yet?
No, they're not. They're still operating at a net loss. It was $91.4 million for all of 2024. And for Q3 2025, the loss was $21.4 million.
So they're burning cash.
They are, but it's intentional. The cash burn is from aggressively building out their commercial, team hiring, sales reps, training staff. It's all showing up as high SG&A expenses.
Okay, but a $21 million loss in one quarter is still a big number. They have a target for EBIT to break even in 2027. How aggressive is that forecast?
It's ambitious, for sure. But it's achievable if the growth story plays out like they expect. It really hinges on two things.
Which are?
First, that sustained revenue growth from the new CPT code. And second, continued expansion of their gross margin.
Where's their gross margin now?
It's already pretty healthy, around 65% in Q3 2025. The long-term goal is to push that up toward 68 to 70% as they scale up manufacturing on those high-margin handpieces. It all comes down to utilization. If that keeps growing, profitability should follow.
All right, time to pour some cold water on this. For a high-growth story like this, the risks can be just as big as the opportunities. What's the biggest threat to this whole thesis?
The main competitive risk, interestingly, it doesn't come from a direct copycat of Aquablation. It comes from a company targeting the low-acuity part of the market.
You're talking about the ZenFlow spring system.
That's the one. It got FDA clearance in December 2025, and it's a real threat. They're aiming for patients with smaller, less complex prostates and earlier intervention.
They're calling it a first-line interventional therapy, or FITIT.
Exactly. It's less invasive. It's a reversible implant for milder symptoms. So the risk to PROCEPT isn't really in their sweet spot, which is the complex, large prostates. The risk is the cannibalization of the patient funnel.
Meaning a younger patient with early symptoms might just opt for ZenFlow to kick the can down the road, to postpone a bigger surgery.
Right. Why get a full robotic resection now if a quick, reversible implant can buy you a few years? If ZenFlow captures that early-stage pool, it could force PROCEPT into a smaller niche of just the most complex cases.
And that would make their current valuation harder to justify.
It would limit their total addressable market for sure.
And the second major risk was surprisingly low tech for a robotics company. It was all about the supply chain.
This is a really critical vulnerability. It has two sides. First, there is the geopolitical risk.
With China.
Right. Key components, specifically the advanced ultrasound transducers for the high-DRS system, are sourced from partners in China. Any escalation in a trade war could mean tariffs, which drives up their costs. Analysts estimate it could shave up to 1.5% off their gross margin.
Which puts more pressure on that 2027 profitability goal. And what was the other side?
The other side was a kind of bizarre commodity risk, which we saw play out in late 2024 with the saline shortage.
The saline shortage.
Yeah, Hurricane Helene damaged a major production plant, and it caused an acute shortage of basic saline solution. This resulted in somewhere between 10 to 20% of planned aquablation procedures being delayed or canceled.
That's unbelievable. A multi-million-dollar AI-powered robot sidelined by a shortage of a $2 bag of saline.
It's absurd, but it just highlights how dependent even the most high-tech medical devices are on the absolute lowest common denominator parts of the healthcare supply chain.
Okay, let's pivot to the biggest potential upside, the thing that could really transform the company. Moving into oncology.
This is the huge long-term opportunity, the dream of a dual-use platform. They're running a pivotal study right now called WaterFi PCA. It's looking at aquablation as a focal therapy for localized prostate cancer.
And why is that shift from BPH to cancer such a fundamental game changer for them?
Well, if the study is successful, and we should see results around 2027 or 2028, the robot instantly becomes something much bigger. It could double or even triple their total addressable market.
What's the TAM for prostate cancer treatment?
It's estimated to be over $12 billion globally. This would transform PROCEPT from a BPH specialist into a true multi-disease urology platform.
And the early signs from the trial look promising, particularly about where the procedure can be done.
Yes. The trial has already shown that you can treat localized prostate cancer with Aquablation in an ambulatory surgery center, an ASC, with the patient going home the same day.
Which is a huge deal for cost effectiveness, moving it out of the expensive main hospital OR.
It's a massive disruption to the current standard of care.
So let's wrap this all up. We have a company with superior clinical data, a great business model, a huge regulatory tailwind coming in 2026, and a CEO who knows how to scale. What's the final verdict from our sources?
The analyst consensus is a buy or a long-term outperform rating. But, and this is important, it comes with that high growth, high volatility profile. This is not a sleepy investment.
And the core thesis is that they've made it across the valley of death.
Right, that dangerous gap between just having a cool piece of tech and achieving real commercial acceptance.
Yeah.
They seem to be on the other side, and they're positioned for what could be a really dominant spot in urological robotics.
And that dominance is really built on that unique combination of factors. The long-term data, the AI standardization, the new CPT code, and the new CEO's expertise.
All those things together make them look like a structural winner in a market that's only going to get bigger because of demographics. Assuming, of course, they can handle the competitive threat from ZenFlow, and they get their supply chain risks under control.
Which brings us to our final takeaway. The big question we want to leave you with is this. If that prostate cancer study, Water 4 PCA, succeeds, and Aquablation becomes the standard for focal cancer therapy, does PROCEPT BioRobotics truly become the next intuitive surgical?
Does it become the definitive robotic platform for the entire field of urology, not just BPH?
Considering the multi-billion-dollar implications of that expansion, it's a prospect worth some serious thought.
It forces you to think not just about the market today, but the potential market 5 years from now.
Thank you for joining us on this depth dive.
We hope this was a useful shortcut to being well informed.
We'll catch you next time.